He gave me a $600,000 number last time we spoke, and he told me that he got an offer at $575,000 a year ago, and he turned it down. I said, why didn't you take that offer?
Good job. Mr. Seller, why did you turn that offer down? That sounds like a fantastic offer. Something is a little strange to me that he's looking for $600,000 on a facility that's clearly not worth $600,000 based on the income it's producing, and he turned an offer that was just $25,000 shy of that. So either A, I don't believe that he got an offer for $575,000, or B, probably not a very realistic owner. Welcome back to season 2 of the Storage Wins podcast. My name is Alex Pardo, and I am joined by my friend and coaching client, Mr. Dan Wenzel. Dan, what is up, brother? Welcome back to the podcast, my man. How you doing?
Doing well. Great to see you. It's been a while.
It has. So yeah, guys, when Dan says it's been a while, he has been traveling. There's been a lot going on. So the last time we recorded this episode was about a month or so ago. Now, obviously, you don't realize that because we're releasing these every single week. But I think it's a perfect opportunity for us to recalibrate. So here's what I'd like to do, Dan. For those who have been following along in the journey, even those that maybe we can welcome, that maybe they came across this podcast and this is their first episode, we have been working together now for, I want to say 3-4 months. And when we set out on this journey, it was to help you buy your first storage facility within 6 months, which right now I think we're about 4 months into that process and into that journey. So why don't you give us an update? And here's where I'd like to start. What are the wins that we can celebrate with you now, and what's currently working for you? Give us a quick overview and snapshot as to where you are right now in your journey, and what are the wins and things that we can celebrate with you.
Yeah, a few wins. One would be my VA, who's been doing cold calls for me. She keeps bringing me leads. They haven't all been the best, but at least that flow has still been going. And I also have increased her hours. So I've doubled them from 2 hours a day to 4 hours a day. And so that's been great. And I mailed a contract out to an owner, the one that accepted my offer. So it's been a little tough getting the contract to him, even though I overnighted it to him because he doesn't have email.
We'll talk about the challenge. Yeah, don't worry about that. Let's just. Okay. By the way, let's just keep it on the wins right now. So VA is okay, and just to zoom out and give people some context, and then I'm going to turn it back over to you so you can keep flowing with the wins. This is coming from somebody who had a big fear or concern or a lot of doubt and worry about even hiring a VA. And I remember one of your initial concerns was like, what if I don't have enough work for them? And now you've just doubled their hours from 2 hours to 4 hours. They're consistently generating leads for you. So that's helped you buy back your time. Huge win. And then, dude, you got a verbal acceptance. Now you don't have it in writing yet. And it sounds like there's a few challenges that I think I can help you with there. But if all things, plan out as expected, you're going to be under contract here pretty soon on another facility, right?
Yep, exactly.
Okay, beautiful. So that's 2 wins. What else do you have? Anything else we can celebrate?
I'm about to put another offer in today on another facility. So that's a small win, trying to get more offers out there.
Yep. 100%. By the way, I always find it interesting when people say small win or big win, and I'm guilty of that because to me, all wins are big. You can't get the big win without stacking the small wins. The small win leads to the big win. So every journey, every race begins with the first step. So believe me when I tell you, brother, sending an offer is no small win. It's a big win because it's hard to do deals if you don't make offers, right? So, all right, man. Well, anything else?
As far as wins, that's about it. Yeah.
How's it going on the relationship building side, which I'm such a big proponent and advocate of constantly building relationships with people, whether it be inside the Storage Wins community, outside, like just overall, how do you feel you're growing in that department?
Feel like I've continued to build my relationships with the Storage Wins community, just continuing to do the underwriting calls and each time I do one, I look at somebody's deal and get to know them a bit better.
Yeah.
Um,
Yeah.
and with trying to find an attorney for the property I'm looking to get under contract,
Mm-hmm.
I've been looking in this area for storage facilities a lot. So if I can get this attorney, well, I got them to write the contract for me or revise it for me. So now I have an attorney contact who I can
Yeah.
use for other facilities in that area.
Beautiful. And just to zoom out and give people a little bit of context, one of the things I challenged Dan early on, if you remember in this season, was to if a mentor told me years ago, Alex, if you want to get really, really good at something, learn it, do it, and then teach it. And I challenged Dan. Dan has gotten really, really good at underwriting storage deals, essentially analyzing them to determine what are they worth, what he should offer. And while he may not give himself enough credit, I and others within our community give him a lot of credit. And I challenge him. I said, hey, you're going to spend the time every single day, every single week to underwrite deals. Why don't you just post in the Storage Wins community, hey guys, I'm going to be underwriting deals for an hour. And feel free if you have questions, if you want me to look at your deal, if you want me to help, jump in. And now you've been doing it consistently for how many months? I don't know. It's probably been 3 months or so that you've been doing these calls.
Yeah, three sounds right.
So do you feel like it's helped you get sharper in terms of your underwriting? And do you feel like it's helped you build more relationships because you're always giving and helping others?
Yeah, the consistent, to be able to consistently underwrite deals for others has just kept it fresh in my mind. And I've connected with people who I
Yeah.
otherwise might not have in the community.
Yeah. And I know you know this because I think you've heard it enough at this point, like people singing your praises and giving you your flowers, so to speak, in terms of underwriting. And sometimes we can be our own worst critics. And I know that you don't necessarily give yourself that credit or maybe even feel like you're a strong underwriter, but you are, and others see that as well. And so hopefully that's helped boost your confidence as well in that department, even though we may still look at deals from time to time and still have question marks. I mean, man, there's deals sometimes I look at that I have some question marks, and it's always good to be able to have a community of like-minded people that I think you can bounce things off of. And sometimes people view things from a different lens, have a different insight and perspective. I know for you, one of the breakthroughs several months ago was you used to only analyze deals through the lens of raising equity, like bringing on an equity partner. And I remember that was a big unlock for you is, hey, like there's multiple ways you need to view this through a different lens. If you're only looking at it through one lens, you're only going to see what that lens is going to provide for you. But sometimes you got to zoom out. Sometimes you got to zoom in. Sometimes you got to think about it from a wholesale perspective and putting on that hat, private money, seller financing. And can you talk a little bit about how that's helped you be a better underwriter in terms of how you're able to zoom out and look at a deal from different angles?
It helps me to be more open-minded to different ways to either finance the deal or raise the money for a deal. So if a price is the most important thing to the seller, then structuring it a certain way can help me get to their price, or I might need to structure it a certain way to get to their price. Like I might not be able to bring in private money. I might have to wholesale the deal potentially.
Yeah.
So look at it through a wholesale lens,
Okay.
just because the price that the seller was asking was just out of the range of what would work for, say, bringing in an equity partner.
Yeah, that's right. And sometimes you know because you have enough reps now is that when you're looking at these deals from a wholesale lens, sometimes you can pay a little more than if you were gonna make an offer to take it down yourself. Correct?
Yeah, if I'm going to bring in an equity partner, it's going to divide the returns amongst more than one person. So it's going to make it harder to achieve. If we're looking for, let's say, a 10% cash on cash return, if you're dividing that between two people, then you're getting a 5% return. So if there's going to be someone buying the deal who's self-funding, then they're going to be able to get those higher returns that they're looking for if it's all going directly to them.
Yep, that's right. So beautiful, man. Like, look, so a lot of wins to celebrate, man. I think you're doing great. You're making more offers consistently. You've gotten better when it comes to underwriting. You've built more relationships, and I want to highlight that, man. Not to blow smoke and like make your chest puff out a little bit more, but sometimes I think it's wherever you are in your journey, there's always wins. There's always things you can celebrate. That should help give you confidence. The key is with anything, it's consistency on the right activities and the right actions. Okay. And that's why we've spent a lot of time on previous episodes, like analyzing where you spend your time, talking about KPIs and key performance indicators, and how many meaningful conversations are you having? How many deals are you analyzing and underwriting? How many offers are you making on a weekly basis? Those are the small hinges that move the big doors in this business. And so we want to continue to keep a focus and an emphasis on that, Dan. So let's talk about, I want to talk about the two deals that you're currently working. The one where you sent an offer, and I know that there's a little bit of a challenge, so let me help you address that. And then let's talk about this other one that you're working on, okay? So let's first start with the one that you've been working with this gentleman who I understand does not have email, correct?
Yeah. That's
okay.
Right. He's
so he doesn't have
80 years old.
Okay, so he doesn't have email, almost 80 years old. Just as an aside, and I've dealt with that situation once or twice. Sometimes, look, you have to go old-fashioned snail mail. Now, I wouldn't use snail mail. I would do overnight, which I know you did. And I know you have a little bit of a hiccup there. Maybe you can share with people the lesson learned and the mistake there. But one thing that I want to encourage you to do, whenever you're faced with that situation again, it's worth asking, do you have a family member or friend who does have an email address that you connect with or communicate with frequently? You don't want it to be like the old high school buddy that he hasn't spoken to in 30 years, obviously. That would be a really awkward and random favor to ask. But just ask. Just ask, hey, by any chance, I understand you don't have email, totally cool. You know, I have some people in my family that prefer not to use it or whatever. Do you know somebody? Do you have a friend or family member maybe who has email? I remember one seller I spoke to a couple of years ago. He didn't have email, but his wife did. And so I was able to send a letter of intent to his wife. His wife was the one that understood, quote unquote, the tech side of things. He didn't even know how to turn on a computer. And she was able to print out the LOI, So anyway, that's just a quick side tip. If you ever face that in the future, is sometimes the most obvious things are right in front of us if we just take a step back, but just asking, hey, do you have somebody who might have an email address? Because clearly that's going to speed things up. Now, if you get the sense, Dan, that it's just somebody who's really like old school and like analog, right? And they do have an email, I wouldn't resort to that. I might still overnight it just to make sure they get it, because who knows how long it might take them to get to a friend or family member to print out an email or even view it. So with that said, is this a deal? You've already had an agreement verbally. Have you remained in contact with the seller?
Yeah.
Okay,
I got
huge.
a couple conversations with him.
A couple over the course of how long have you been working on this?
Probably once a week over the last since he accepted it.
And you shared with me that the initial, because some people might be thinking, well, if you overnighted it, like why has it been weeks if you overnighted the offer?
Well, initially it took a little time to get the attorney to review it, or to find an attorney is what took the longest. And then I had him review it. It took about 5 days for them to get to work on it, and we went back and forth a little bit to make sure it was revised to the way I liked it. And then once he provided it to me, I overnighted it, and the overnight still took 2 days because it's going across the country, and I got to the post office late in the day. But anyway, I sent it to the wrong town address.
Okay. Hey,
so I sent it to the guy's address, but the town of the self-storage facility. So I had to send it out again.
Yeah. All
and
right, man.
and now
This is one that years from now you'll look back and you'll. My apologies. Years from now you'll look back and you'll laugh. And I mean you're already like laughing and making light of the situation. So, yeah, just make sure obviously you have. I always like to verify contact information, mailing address, especially something like that. So all good. So have you confirmed that the offer is now in the seller's hands?
no, I haven't. He should get it today, I believe.
Okay, he should be getting it today. So you sent it, I guess, on Friday. Okay. Okay, got it.
It was Thursday. I think it was Thursday at the end of the day. And they said today was the day that he'd get it.
Okay.
Maybe sooner,
Okay.
but today at the latest.
All right. Is this a deal that you're gonna wholesale, or do you plan? Is this one that you want to take down and buy and operate yourself?
Yeah, the plan's to wholesale this one.
Okay, the plan is to wholesale. Some might be thinking, "Hey Dan, you got into storage because you want cash flow and you want to build wealth long term and have more time and experience freedom. Why wholesale this one?"
So every deal I looked at, I always thought I had to look at it through a lens of I have to buy it. This one didn't quite reach my buy box criteria. It's a little on the smaller side, and for how far away it is from me geographically, it just didn't make sense to hold on to it.
Mm-hmm.
But since I still had a seller and I could agree to a price with him, it could be a deal for somebody else.
Okay. And guys, that's why I think it's so important that you clearly define your buy box, something we call the buy box blueprint. We'll share a link in the resources where you can watch a video and listen to a podcast about how you can create your own buy box. In fact, that's something we covered in season 1. Super important that you get clarity about what a deal looks like for you, not just size, but market, the type of deal, what you want the deal to provide you and others that you might work with. And Dan, because he's clear on his buy box blueprint and he's got that dialed in, he realized that, hey, this doesn't quite fit what I'm looking for, but at the right price and or terms, it's still a deal and an opportunity for somebody else who that could fit their buy box blueprint. So awesome, Dan. Keep us posted on this. I'm certain that you'll be sharing it obviously in the Storage Wins community, maybe even in the Storage Wins Facebook group. And once you get that facility under contract, then maybe let's dedicate a future episode to going through the opportunity. Who knows, you might even find a buyer. Now, granted, this will be released probably way past the deal. The deal would have probably already been sold by then. But I think it would be valuable for those following along that maybe haven't considered wholesaling storage or don't really know how that works, for you to walk us through that whole process. And maybe we can dedicate an episode or two to that. So keep us posted on that. Do you have, before we move on to the second deal, do you have any questions or concerns about that one?
I don't. I can say it's maybe working out all the way it should be, because each delay in trying to get this thing under contract, the seller has just rolled with it. He's not in a hurry, and so maybe it's the perfect deal for my first one, because he's flexible and willing to roll with the mistakes.
Good deal, man. Well, hey, one thing I want to quickly share with you before we transition on to the second one you're working is, do not make a common mistake that I see a lot of people make, which is not maintaining constant and frequent communication with the seller. I've seen people make this mistake in the single family side of the business. I've seen people make this mistake in the storage side. Now, am I telling you that you need to call this seller multiple times a day, every day until this deal is inked? No, I am saying that maybe once a week is not quite frequent enough, depending on the seller, their personality type, and how the conversations have gone. Trust your gut and your instinct, but I would rather you err on the side of more communication and more frequent communication than less communication that doesn't happen that often. Okay, you certainly shouldn't be going like a week or two without connecting with the seller, even, by the way, after you have inked this deal. You want to make sure that you're continuing to build the relationship and continue to date the person. It's kind of like, sometimes me and my analogies, man, and you start dating somebody, if you can remember back prior to like when you were married, you start dating someone, like you don't stop courting them. Like you don't stop getting to know them. Like if anything, that's when it intensifies and amplifies. Same thing with the seller here in a non-creepy, weird way, clearly. So, all right, man, awesome. So keep us posted on that one. Let's move on to the second deal that you're working. Go for it. You
Yeah.
can jump in.
Like me to share some details about it?
Yeah, yeah, please do.
Okay, so it's 66 units and almost 10,000 square feet, 9,900 square feet. And the owner's rates are about 25% below market. Actually, market is only one other facility in like a 7 mile radius or so. It's a really small town. And again, this one, depending on the offer structure that the seller accepts, if I'm able to come to an agreement with him, this one may end up being a wholesale deal also, because one of the big factors that I didn't care for was the median household income in the town is under $30,000. So that was a little bit of a red flag. But the facility's full, and the one competitor is also somebody. It's another facility that I've been calling on that is not run by what we often call a sophisticated owner, who doesn't look like they're optimizing the operations of the business.
What are some
So
signs for the benefit of everybody like listening and following along? What are some telltale signs of an unsophisticated operator? Like what are some of the things that jumped out at you that made you designate them unsophisticated? As maybe rude as that may sound to someone, that's just a term that we use. Right? We're not sharing that with them, but
right.
like, yeah, what makes them an unsophisticated operator?
Yeah, it's no diss to the owner. It's just looking at the way they're running the business. I see that they don't have a website.
Hey Dan, could you
They
speak up a
haven't.
little bit? Your volume got like really, really low.
Oh, yeah. Um, I noticed that the facility itself that I'm in talks with the owner about doesn't have a website, and the one competitor in town doesn't have a website. So, they're not getting the online views visibility that they
Mhm.
could be getting just by simply having a website. Nobody can rent online, obviously, since they don't have a website, which is it just makes it easier for a customer. And the Google business profile on Google Maps is not claimed, so
Okay.
they seem to not have any kind of sense of their web presence.
Yeah.
And those two things alone stand out to show me that they're not kind of maximizing how they could
Sure.
be running the business.
And those are things that you want to look for when you jump on Google Maps and you start evaluating a market and all the facilities in the area. Dan is 100% right. Like you want to look, do they have their Google My Business profile claimed? Do they have a website? If they do have a website, what's the look and feel of the site? When you look at the contact us section, does it have a personal email like at Yahoo or at Gmail or something? Do they have pictures on Google? Do they have just what's the overall sense, feel? If they don't have one or all of these things, Google reviews. Do they have any Google reviews? If so, how many stars? How many reviews? Those are all indicators that can help you formulate an opinion on the level of sophistication the operator might have or be. Okay. So super important. So then 90, almost 10,000 net rentable square feet, 25% below market rents, and market is only one other competitor. How many people in a 5 mile radius? What's the population?
About 1,000 people.
Okay, about a
So it's a
thousand people.
small, more rural area.
Okay, so that's what we would call a rural area. So let me start. Is there anything else noteworthy to mention before I just recap on a few things?
There's no room to expand and on the parcel, so it can't add units, which is often one of the ways we add value to these. And notably, it is right off of a highway. You can see it from the highway. So
Okay. So
that's
it's got
positive.
potential visibility. It's got potentially a good traffic count, daily traffic count, potentially depending on where it is. Even though it's rural, so there's probably not a whole lot of traffic going through there. But the fact that it's on
Right.
a highway, it's gonna have more
Yeah.
visibility than one that obviously is not on a major highway.
Yeah, it's on an interstate, so it's a major highway, and it's just off the exit, so that's
Okay,
nice
that's good.
for accessibility. Yep.
So these are a few things that jump out at me. I'm a positive guy, so let me start with the pros. No, we haven't even talked numbers, and one thing I'll share is that uh, everything at the right price or terms could make sense. Okay, let's start with the positives. About 10,000 net rentable square feet. If you're looking for your first deal, solid size to start with. When I got into storage, I was focused on a little bit bigger, but nevertheless, 10,000 I think is a really good size facility to start with, especially if you're not needing to go third party management, because a facility like that, the revenue is likely not going to be high enough to support third party management expense. So you're going to need to get a really, really good boots on the ground and manage that person, which I think is great from a learning perspective. Um, I like the fact that it's 25% below market rents. I like the fact that there seems to be demand for storage in the area. If this facility is full and the competition is full, and by the way, competition means only one other facility, I think Dan said in a 7-mile radius. So I like the fact that there's more of a demand for storage than there is supply. Um, and it's on a major highway, okay, close to an exit. Those are the pros. The cons are medium household income of under $30,000. Under $30,000 is really, really low. That's typically not a sign of a strong market when you talk about some of the demographics. So I think some of the demographics here are struggling, right? 1,000-person town, that you don't have a lot of people that are going to essentially be your customers, right? So now it's great that this facility is full, but I always like to look at the population and ask myself, are there jobs coming in? Is it growing? Because if it's not, if it's contracting, then it could be more challenging to raise rates, to continue to lease up. And so that is definitely a red flag and a cause for concern. Population, no room to expand. And then medium household income could lead to more management intensive headaches. It could lead to bad debt, delinquencies, things of that nature, which is why I always like to focus on medium household income, as Dan knows, north of 50,000 ideally. But one thing I will say is that I never just look at one factor and say, hey, that's the deal breaker. It's a combination of all these different things, filtering it through your buy box blueprint, which is why Dan is being wise here and saying, hey, doesn't quite fit what I'm looking for, but if I can get it at the right price and offer it to somebody at the right price or terms, could be a deal for somebody else that's willing to take it on. So Dan, anything to, I guess, to clarify or correct that I may have said that wasn't accurate, or maybe anything else from your perspective there?
Nope, that was good. Good summary.
Okay, got it. So now that we have an overview of this, are you trying to figure out what to offer?
Yeah. The
Okay.
seller's open to seller financing, actually would prefer it because he doesn't want to pay taxes, or he wants to 1031 exchange into something else to help his tax situation with selling the property.
Okay, so that's another benefit. It
Hmm.
opens up more doors and opportunities for you to structure terms that could make sense. And that's, by the way, as an aside note, one of the things I love about storage is they're business owners. So oftentimes they're much more open to seller financing because they understand the potential tax implications of selling these facilities. And so I have found you do less. Sometimes you have to educate them. But when I was in the single family space, you'd have to educate them a lot more about seller financing and the benefits to the seller and the benefits to us as the buyer, which is why I've bought and sold storage facilities on seller financing. It's a very, very powerful tool. Well, as with anything, before we can determine what to offer, we first have to ask what revenue the facility is generating and what the current net operating income is. Why? Because we're going to make an offer based on the value of the facility, which is determined by the NOI, which is the net operating income that the facility is producing today. We're not going to be making an offer based on pro forma, what it could do in the future. We're going to make an offer based on what income is the facility producing today. And yes, we're going to look at what it could and should be producing if we were going to step in, manage and operate it with our processes, our systems. We're going to implement some marketing, some technology, introduce fee income, things of that nature that are all levers that we have to add more value. So with that said, Dan, what is the current annual revenue of this facility?
He just gave me a ballpark that it brings in about 4,500 to 5,000 a month. So that works out to about 55 to 60,000 a year.
Okay. Okay, so let's do me a favor. If you could put your coach / teacher hat on, and let's do some quick back of the napkin analysis here. So how would you teach those following along that with just that number, with just the monthly or the annual revenue, we can come up with a ballpark on what the current facility is worth? So walk us through that step by step.
So being that it's a smaller facility, relatively, I would multiply it by 0.6 to back out a 40% expense ratio.
Okay. So in storage, and just to add a little bit of color here, operating expense ratios usually are going to be 35 to 40%. The smaller the facility, I would lean on the higher side of the operating expense ratio. That means that for every dollar in revenue the facility generates, it's going to require 40 cents of that towards expenses in order to generate that dollar. Okay, so Dan is saying that because it's a 9,900 square foot facility, he's going to just assume that expenses are going to be on the higher side at 40%. So he's multiplying that 5,000, let's just say on the upper end, or if we want to be a little bit more conservative, the 4,500, he's multiplying that by 60% in order to back out the 40% expense ratio. So if you just take 4,500 times 0.6, another way to do it is 4,500 times parentheses 1 minus 0.4 or 1 minus 40%, you'll get the same number. Okay.
Well said.
So what does that give us, Dan?
That gives you, well, I would also multiply it by 0.85. 85% occupancy is my anticipated occupancy, unit occupancy, or physical occupancy of the facility. So by predicting that I'm going to run it at a 40% expense ratio at 85% occupancy, that's going to give me my estimated NOI, or net operating income.
Mm-hmm. Before you share that, why 85%? Like, why not 90%, 95, or even 100% occupancy?
Yeah, it typically will produce a higher revenue by pushing the rates as high as the market can sustain at an occupancy around 85 to 90%, as opposed to keeping the rates lower and keeping the facility at 100% occupancy.
Yeah, exactly.
So 85 is the conservative target, ideally around 90%.
Okay. So we've taken the annual revenue, or we've taken the monthly revenue. We backed out our 40% expense ratio, which means we multiplied it by 60%. From there, we backed out 15% vacancy, which means we multiplied it by 85%. And that gives us our projected NOI. And again, guys, this is just a super quick back of the napkin analysis that's intended in less than 60 seconds to give you just a ballpark of what the facility is currently worth. So what is that NOI number that it gave you?
Honestly, I didn't do that math to see what it came out to.
Okay, that's all right.
But I'll do that here. And
all right, no worries. Well, while you're doing that, let me just kind of walk people through like what you're going to come up with and then what we're going to do. So when Dan does that math, he's going to come up with a monthly net operating income. What we're going to want to do then is annualize it. So we're going to multiply that by 12 months in a year. And that is going to give us our annual net operating income. All right. So Dan, did you catch up to me there?
Yeah, so based on 5,000 a month, 60,000 a year revenue, and then 85% occupancy and 60%, or I'm sorry, 40% expense ratio, it comes
Yep.
out to 30,600 a month.
Okay, 30,600 a month. Now, a
Or I'm
small
sorry, per year.
yes, yes, I'm sorry. Yes, 30,600 per year in NOI. So keep in mind, this is a rural market. How do we know that? There's only 1,000 people. Uh, Medium household income, like a lot of the demographics are not working in our favor. So we have something called the quick offer range, which if you want a link to be able to download that spreadsheet, just find me on social media and maybe send me a DM and say quick offer calculator. And then I'll know that you heard me on the podcast and we can get you a link for that. At Alex Pardo 25 on Instagram or in the Storage Wins Facebook group, you can find me. So then with that, now that we know it's generating 30,000, let's just round it down, 30,000 in NOI. How are we determining what we want to offer?
Often, storage facilities are valued based on a cap rate, which is a
Which means what
multiple of
exactly?
their. It's a multiple of their NOI
So
based
it's,
on how
it's
their
a,
market's currently trading.
yeah, it's an expression of value based on the market, right?
Yeah. And rural can be different than urban and suburban. They could be trading at different cap rates or different multiples of their revenue or NOI. And so I would come up with an offer range based on a range of cap rate. And so usually like an 8 to 11 cap is at least what I start with in the conversation with the owner, just to get a sense of where they stand with it. And I
Would
don't
you
want
would you
to.
say would you say a smaller facility in a smaller market, you're probably going to lean more on a higher cap rate, especially since you plan on wholesaling this and you need to bake in some margin for yourself?
Definitely. Yeah.
Okay.
That's generally um, the smaller facilities generally lean towards a higher cap rate.
Okay. So as an example, if we wanted to generate or make an offer based on a 10 cap, right? You would take that $30,000 and divide it by 10%. And that would give you a $300,000 offer, right? And that is based on current income. That's not factoring in any upside of future projected income based on where the market is. A facility like this in a market that has probably tough demographics, I don't know how much future upside I'm baking in. So I'm going to be much more conservative on the offer. I might even be offering a 12 cap. I might be somewhere in the $200,000 to $250,000 range. In fact, I know I probably would be, maybe less. But I don't want to put any thoughts in your head. What are you thinking of offering?
When I put all this information into the spreadsheet and let it run its magic, it actually factoring in the ways I would plan to, or somebody who knows how to add value to a storage facility, the typical ways that people look to add value are increase rates, implement fees like late fees and move-in fees, lock fees potentially, and tenant protection or tenant insurance, and factoring those pieces in and letting it play out. It actually, I'm coming up with around $550 to $600,000, and I can, as we're talking about it, that price doesn't necessarily make sense, but through the spreadsheet, it all looks like it does.
Yeah.
So, um, yeah, this is where, with the seller financing terms being really favorable towards the buyer, I'm able to push the price up much higher,
Well, if we
and
don't want
that's
to
part of
just
the conversation.
yeah, and I was just gonna say sorry, Dan, I didn't mean to interrupt you, but we're not looking to push the price up just to push like. And I haven't asked you, but I'm assuming you asked the seller what they're looking for, correct?
Yes.
What are they looking for? What price did they have in mind?
He gave me a $600,000 number last time we spoke a couple weeks ago. And he told me that he got an offer at $575,000 a year ago, and he turned it
Which
down.
which you respond when he told you that, you responded what?
I said, "Why didn't you take that offer?"
Good job.
Because that's a great offer.
Solid response. Why? So whenever I hear,
Yeah.
"Hey, I already got an offer and I turned it down," Mr. Seller, why did you turn that offer down? That sounds like a fantastic offer. Your facility is generating $30,000 in net operating income, and he offered you a 5 cap, basically, right? He offered you almost $600,000. Like, why'd you turn that down? Look, Mr. Seller, based on that, I think that's a great offer. I don't think I can come anywhere close to that just based on what the facility is currently producing, unless there's something I'm missing, because in store, and I would dress it up, and I'm kind of shooting from the hip here, being a little bit facetious, right? Semi-sarcastic. I certainly wouldn't do that with a seller. But yeah, oftentimes you're gonna hear, and the truth is, whether he got an offer or not is not gonna impact what I'm going to offer. So how did you address it? And as we start to kind of wind down here, how did you address it and take it from there?
I said, "I can get you an offer, but the terms are going to be pretty extreme as far as how favorable they'll be towards the buyer in order to make a price work that you'll be happy with." And
Are those the words
he
you
said,
used,
"Okay."
by the way?
No, those aren't the exact words. It
Okay.
was something along those lines, just letting him know that the terms are going to be extremely favorable towards me as the buyer in order to get the highest price I can for him.
Okay. Fair. I appreciate you being direct and transparent, because yeah, if you're going to give them their price, then you need to control the 3 other terms, and that's down payment, that's the term of the loan, and that's the payment, or essentially the interest rate.
Yeah, and I also threw in there on the conversation, I said, and I'm going to have in there that there will be a few years of no payments at all to him in order to let the business build up some cash
I love
to
it.
be able to afford the balloon payment down the road.
I love it. I love it. So, guys, I think here's what we're gonna do. Not to tease you, but I want to go ahead and put a pause on this one, and I want to continue the conversation about this particular deal and seller financing and what might be the best way Dan can structure this, based on the fact that the seller is looking for a $600,000 offer. Which, by the way, something is a little strange to me, that he's looking for $600,000 on a facility that's clearly not worth $600,000 based on the income it's producing. And he turned an offer that was just $25,000 shy of that. So either A, I don't believe that he got an offer for 575, or B, probably not a very realistic owner. And it would require some really, really, like you said, strong and favorable terms for you as the buyer for you to make a $600,000 number work. Because if it's only generating 30 grand, how much more could it possibly be generating for this facility to be worth more than $600,000 in the future? You know what I mean? It's like, if the rents are only 25% below market, in my head, I'm running through the numbers and I'm not seeing a path to how this facility could be worth more than $600,000 in the future, unless it's hey, the terms are so great and I don't have payments for a number of years and I have a ridiculously low interest rate, maybe even a 0% interest rate, where it's okay that the facility is not worth more than 600 because it's just going to be a cash flow play. And I'm able to get terms that are 10, 15, 20 years out where it's just all principal paid down if I'm able to get 0% interest. So,
Exactly.
okay. So I want you to, let's build on this deal and seller financing in general heading into the next episode. And with that being said, guys, make sure that you're subscribed to the Storage Wins podcast so that every single week you're notified when new episodes come out. I encourage you to continue to follow along in Dan's journey. He's there. He is knocking at the door. In some cases, the door has been cracked, and in other cases, it hasn't. And he might have to just bust in right? Like a SWAT department would into a crack house. But strange analogy, but hey, one way or the other, we're going to figure out how to make this happen for Dan. He's putting the work and energy in. He did take a little bit of time off in the last month, and now he's resetting and getting back after it, getting offers out. And that's what it's about. Success is not a linear straight line. It's going to have a lot of twists and turns and ups and downs, and you're going to loop around 27 times sometimes. There's going to be setbacks. But the only way that this business doesn't work for you is if you don't work and you don't work consistently, and or you just don't have the right guidance, support, and community. So if that's something that you'd like to discuss and learn more about Storage Wins, head over to storagewins.com. And with that being said, I will connect with you guys on the next episode. Take care, Dan.
Thanks. You too, Alex.